Welcome to the Explainer. Today, we're going to jump right into one of the most common and, frankly, most expensive misunderstandings when it comes to taxes, the extension. So many people think it's just a simple pause button on everything they owe, but that one little mistake, it can cost you a lot. Let's break down exactly why that is.
Let's start with what the experts call the extension miss. It's this widespread belief that when you file for an extension, you're not just pushing your filing deadline, but you're also pushing back the deadline to pay what you owe. And this quote right here, it hits the nail on the head. That idea is just completely wrong.
If that little light bulb just went off in your head, hey, you are definitely not alone. It is such a common assumption, but it's one that leads directly to some pretty big and honestly totally avoidable penalties. Okay, so here's how we're going to dive in. First, we're going to really bust that myth wide open. Then, we'll look at the two separate penalties you can get hit with. After that, we'll talk about the solution. It's called the safe harbor rule. Then we have to untangle the tricky differences between federal and state rules. And finally, we'll cover what you can do if you've already made a mistake. So, let's get right to the heart of this. The tax code is crystal clear on this point. Filing your return and paying your tax are two completely separate duties. And confusing those two things, that's where all the trouble really starts. See, when you file that Form 4868 for an extension, all you're doing is extending your duty to file, the obligation to get all the paperwork in. But your duty to pay, that's anchored to the original deadline, almost always April 15th. That date does not move an inch just because you filed an extension. Now, this is where it gets really interesting. Just look at the massive difference between these two penalties. The failure to file penalty is a steep 5% per month on your unpaid tax. But the failure to pay penalty? It's only 0.5% per month. That is a tenfold difference in how much this is going to cost you. Huge.
And that right there, that is probably the single most important thing to remember from this whole explainer. Even if you know for a fact you can't afford to pay your taxes on time, you should always file for an extension. Just by sending in that form, you completely wipe out the risk of that giant 5% failure to file penalty. It's a no-brainer.
Okay, so we've established why you should always file an extension. Now let's get into the how. If an extension doesn't give you more time to pay, how in the world do you avoid that failure to pay penalty? Well, the answer is a really important rule called the safe harbor.
You can think of the extension payment safe harbor as the IRS basically saying, look, we get it, you might not know the exact number down to the penny. They'll assume you have a good reason for not paying 100% on time, they call it reasonable cause, as long as you make a really solid, good faith effort to pay enough by that original deadline. And the magic number you need to remember for that sufficient amount is 90%. That's it, 90%. If all your payments by that April 15th deadline, and that includes your withholding from your paycheck and any payment you make with your extension, if it all adds up to at least 90% of what your final tax bill ends up being, you are protected. You're in the safe harbor.
Now, this is absolutely critical. Do not confuse this with the safe harbor for quarterly estimated taxes. That rule lets you avoid penalties if you pay 100% of last year's tax. For an extension, that rule does not apply. Let me say that again. The 100% of prior year trick does not work here. You have to meet the 90% of the current year's tax to be safe. So how do you actually figure out what to pay? Well, it's a pretty simple 4-step process. First, you make a good, honest estimate of your total tax for the year. Second, you calculate 90% of that number. Third, you add up everything you've already paid in, like withholding. And fourth, the difference between those two numbers, that's what you need to pay with your Form 4868 to stay protected. All right, just when you think you've got this all figured out, we have to throw in another layer of complexity, your state taxes. And a huge mistake people make is just assuming that filing a federal extension automatically takes care of things at the state level. Yeah, it often doesn't. So basically, states fall into two main groups. You've got some, like California, that'll automatically give you an extension if you filed a federal one. But then you've got a lot of others, like New York, that make you file their own separate state-specific extension form. They don't care about your federal filing. And this chart just shows you how different it can be. You've got California, it's automatic, but you still have to pay up if you owe. Then you've got New York, which completely ignores your federal form. You have to file their form IT-370. And look at Colorado, they have that same 90% payment rule. The bottom line, you absolutely have to check your own state's specific rules. No assumptions.
But what if you're listening to this and thinking, oh no, I think I already messed this up. Hey, don't panic.
If you get a penalty notice from the IRS, there are established ways you can ask them for a break. So your most powerful tool is something called first-time abatement. Now, this isn't a law, it's an internal IRS policy, and it basically acts as a get-out-of-jail-free card for taxpayers who usually do the right thing and have a good history of filing and paying on time.
So what does it take to get this? Well, there are 3 main boxes you have to check. First, you need a clean record, no penalties in the 3 years before the one you're asking about. Second, you have to be totally caught up on filing all your required returns. And third, you have to have paid what you owe or at least set up a payment plan. If you can check those 3 boxes, the IRS will very often waive the penalty.
So when you boil it all down, an extension is a really helpful tool to help you file an accurate return, not a way to put off paying what you owe. By really understanding the difference between the duty to file and the duty to pay, and by using that 90% safe harbor, you can use an extension for exactly what it's for, without paying a totally unnecessary and expensive penalty for a simple misunderstanding. So the real question is, are your tax habits costing you more than they should?